Let's turn back to earnings now. Amazon, a bright spot in tech today. Its shares surging after reporting a top and bottom line beat and momentum within AWS. Deirdre Bosa breaks down those numbers. Hi, Dee.
Good morning, Mike. Well, Amazon gave somewhat mixed signals on AWS, but seems to be good enough for the market today. Those shares are surging. So I want to zero in on the core e-commerce business and something that might be being overlooked, and that is its revenue outlook. At its midpoint, it was $3 billion short of street expectations, and that is heading into what is supposed to be the blockbuster holiday quarter for Amazon. Now, on the call, management talked about a cautious consumer trading down where they can. That could be a blip, but it could also be a sign of sustained top-line pressure and a changing competitive landscape. Bernstein this morning writes, AWS, operating income, and Temu. You need the answers to all three for the stock to really work, and we got one answer, one on the way, and one is still a question. Now, Amazon answered on operating income, AWS margins up, retail margins up, growing high-margin advertising and third-party seller services. This is about as profitable in Amazon as we have ever seen. Cloud, as I mentioned, mixed signals there, but more optimism. That one is on the way. It's going to have to back that up. Temu, though, refers to a broader competitive threat to Amazon's core, and that's still very much an open question. If, as management says, consumers are trading down, the Chinese e-commerce platform Temu, which is owned by Pinduoduo, offers basement bargain prices. And that's why it's been seen as more of a threat to the dollar stores, less so an Amazon or even a Walmart. But if it is encroaching on Amazon's share, that could hit Amazon's holy grail. That is the prime flywheel. It could take sales away from that core, and that could hurt Amazon's advertising proposition. It could hurt its newly built out logistics network if people are willing to take longer delivery times for cheaper products. It could also give merchants a potentially cheaper option in terms of seller services. On the flip side of that, Temu and another rising Chinese e-commerce platform, Shein, they're low cost, low quality. I'm not sure if you guys have ever tried them, but you essentially pay for what you get. Their popularity may not last, but it is something to watch, particularly this shopping quarter. Now, we did do a deep dive on the Temu threat in a Tech Check Weekly, and you can find all of those at cnbc.com/TC Weekly. And we go into this, how it could potentially, eat away at Amazon's market share. But again, it's that core e-commerce business that's going to be in focus for the rest of the year as we approach Black Friday, Cyber Monday, the Christmas and Hanukkah shopping seasons.
But do we know the market share numbers for some of those Chinese sites, Temu and Shein?
So still very small compared to Amazon, but the growth of them on, say, the app stores of iOS and Google OS has just exploded, which leads, analysts to believe that it's growing faster than Amazon. Amazon, right, kind of serves an almost saturated market. It just has so many Prime memberships. So the threat is there. We have to see how that evolves, and I think that's why the upcoming few months is going to be really important.
Yeah, Dee, it's so telling that when you look through the bull case on Amazon in general, it's all the focus, of course, on AWS, but also the emerging advertising opportunity. The run rate of revenue is like a third of Meta's right now, and not as much about real growth in the core consumer business. It's all about margins and trimming back. And so Amazon being Amazon in its old business.
I agree. And you bring up an important point, and that is that Amazon's core is a low-margin e-commerce business. When you look at, say, its biggest competitors in the race for generative AI, Microsoft and Google, their core advertising, enterprise services, that is a much higher margin business. I would say on the plus side, though, and this is getting a lot of attention today, that operating income was just huge. This is a very profitable Amazon. We're looking at it. It could be that it's sort of filling its coffers, getting to that better measure of profitability in order to challenge them on that front. So you put that together with an AWS that is potentially recovering, more money to be able to spend on generative AI, that could turn out really well for the company.
Amazon, best performer in the triple Qs, having a big jump today, up now more than 8%. Thank you, Deirdre.